Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Wednesday, the 23rd of June, 2021. Well, we had our live What's Up live webinar. Boy, that was fun today. We got it down. It's the fourth one I've done now. And it went just at the speed we wanted. I think it was right on the money, fast. I thank many of you for putting in, getting in, writing your questions early within that, and a lot of you wrote me the emails with the questions. I had all the charts ready to go. So we just covered one thing after the other. 18 minutes later, done and gone. I'm going to make Wednesdays now the day to do them, so you don't have to worry about which dates. You figure out your schedule and you clear it up for that. I might do others during the week if the conditions warrant. So let's assume we get a big report and I want to cover it. I might do them later in the afternoon. I don't know, but I'm going to keep that opportunity. So dead center of the week for sure, Wednesday, barring government holidays, barring me getting ill, me going on a vacation. Eventually I'm going to take one, and it's coming in July. I already know I'm going to Montana, and I won't be taking my studio with me. My paid subscribers will get all the information because I normally record when I'm there what I do. I go back a little bit in time sometimes. I don't want to wake up 4 in the morning on vacation, but I get a lot done. All right, so let's talk about what we've got. We have an important day tomorrow in the sense that the Fed stress test comes out. We get a bunch of economic data, important data first thing in the morning. Jobless claims again come out. The market's looking for them to drop away from what they were last time by about 30,000. We'll see if that's going to be the case or not. And then we get some other data there as to the strength of the economy, GDP numbers, where we all coming in with things we want to know. In the energy sector, we're getting smoke. I didn't say there's good things, there's smoke. And what the smoke happens to be is one of the assistants to the current president, the outgoing president of Iran, is saying that the U.S. is agreeing to drop all the sanctions and allow the oil. Sure, I think we would be. In return for what? That's what he didn't say. So again, smoke. But where there's smoke, there's often a little bit of fire. When we take a look at ARK, this has been a sweetheart of a stock since it bottomed out here. It's come back, but it's in a lot of resistance. Let me show you. The trend is up. You've got the higher low, higher high pattern. The market is over the 18-day average of closes, but it's not an ideal bullish setup. Now, what do I mean by that? In a real bullish setup, the shorter term average will be over the longer term, which would be in this case the 100, and that one would stay over the 200. So you'd have the shortest term, then the medium term, then the longer term, and prices over everything. It's going to fight its way, and that's what it's doing into that. And in the course, it's like an anchor. I got to drag that 18-day average with me. It's based on closing prices, so we got to get rid of them back here. Does that make sense to you? Hope so. The resistance point, and it is here, is the 100-day and the upper Bollinger Band. I never stop paying attention to that. That's a big number and it's hard to get through. So I'm not convinced that the pros are buying aggressively to punch through it. They could, but I don't see that. What you do have is the embedded reading, which means I'm in the rah-rah camp. I am bullish. So I'm looking for the pros on breaks where you don't take out a prior day's high, today's high first on a good break, for them to step in and buy the market. Where's the logical buy? Now it's the 200-day average combined with a moving average I don't show here, but it is shown in my enhanced Bollinger Band course in my morning subscribers. I go over it with them every single morning as to what they should be doing on it. I love that course. It's as I told you, if I had to drop anything and trade one thing that I teach, it would be off that enhanced Bollinger Band course. In BBEU, okay, you've pressed the market to the lower band and you're oversold. Uncle, it's that simple. Uncle, let's see what happens here. PAVE, we talked about the fact that now infrastructure's got to be what the president starts dealing with. He's got a proposal on his table, as I understand it. We'll see if he wants to take it. If he doesn't take it, then he's got to go into the Senate and figure out a way to get all the votes to go his way, and that's going to be a real hard row. So I don't know. President has his hands full. Today he was talking about gun control. If you were watching that, Kamala Harris tomorrow is going to the border. Suddenly, well, I wonder why. Oh, Donald's going to the border too. Yeah, the Donald. So she wants to beat him to the border, obviously. Politics at work. Okay. Oversold, maybe a bounce. A lot of support between the 100-day average and the lower Bollinger Band. AMC, no trend. Higher high, lower low. Waiting to see what's going to happen here. I will give you a signal that turns bearish. Get back under 51.05. I think the pros will hit that market and put a stop either over the high of today or whatever the high is at that point as it gets down there. So that's the number. Nothing could add to the bullishness. So that's something to keep in your gun sight. I'm saying gun sight since I was listening to the president with his gun control. Slow stochastics, flat. You have the bias up. You're caught in what I call that psychiatry range with a higher high, lower low. Very difficult to catch anything in there. PODX, I told you I thought the pros would be out of short positions, and I think they are. That doesn't mean it can't fall further, but the odds-on trade isn't there once you hit the lower Bollinger Band. You normally bounce, or if you hit the upper one, you turn back. And that's what often happens. You're caught in that sideways trade here in the ESGU. You can see it. I mean, it's crystal clear as to what it's doing. When you come to the energy sector, okay, lower high, lower low. I think some of the pros are going short here. At 54.86, straight stop, 56.56, looking for the market to get back in down here to the lower band to cover their shorts. The trend is down. The bias is down, and momentum has flattened itself out, not pointing up. In the emerging markets, the trend remains down. It's been this way. Now you hit the lower band, you exceeded everything, you've come up to fill a gap in there, and now the question is, can it just continue down? It's so oversold, and what I teach you here is I don't think oversold conditions attract new money going short, and most of you don't go short to begin with. Therefore, is there a buy signal there? No. In GLD, higher low, higher high. Where's the first resistance? Let's step back just a little bit. Look at the 100-day average. If you're going to go up here, you've got the market oversold, but you've got a pattern where you're coming in. You had lower highs, lower lows. All you did is rally up. You hit and went through the 100-day average by 1 penny and turned right back down for $2 almost. So I think the analysis was okay there. Now there's something else happening. You see both numbers are under 20. They were under 20 yesterday and they were under 20 on Monday. This tells me that the pros are willing sellers now on rallies until that red line closes at 21 or higher. And they're looking again for the lower Bollinger Band. In the gold miners, same thing. This morning in my updates, I was telling traders as the market was climbing, I think it's a good time to be out of the market. I'm now officially saying the opposite. I'm now saying, okay, on rallies, I think they got to re-enter. They did fine. They caught a sizable trade if they were in the market, if they were in. And now I think it's saying, not ready to go. Okay, you embed, and that's an important thing. TLT. If the TLT chart can get under 142, yesterday's low, which is 142.12, the odds are pretty strong that you'd try to get back down into the 18-day average. But until that happens, you have an uptrend that is overbought and correcting. So you have forces fighting themselves. Overbought doesn't attract new money, yet the trend has been up. We have to wait and see what's going to be on from there. Fed Chair Yellen was speaking today in front of the Senate, by the way, one of their committees, and she's asking for more money. She talked about inflation, and she said no, she does not think 5% inflation like we're getting now as you get that transitory part will be there. She thinks it's going right back down to 2%. 2% would be a good number because that's one of the numbers the Fed needs to stop the tapering. It's the employment number we need. That's why tomorrow's data on employment claims will be so important. FXE, I said I think you can still fill some gaps in here, and that's all that it is. The British pound did fill its gap, so that's something to watch. Trend down. Now the question is, with this market, is it going to embed or not? I want to wait and see if it can hold on with that. So I appreciate the comments that I get from you. A lot of you write me at my email and so on, and I love what you say about these morning videos that I do, because they're meant to do just what you say. A lot of people love the fact that I start off with the news in them. A lot of people take the combo package. They get the futures video that I record at 5:40, and I typically record this one coming out in the neighborhood of, let's say 8:40 in the morning I typically begin. So the idea there is to give you an idea what the futures are doing, why. Well, let's take a look. How many of these are reliant on the futures? The stock indices, every one of them. The metals, every one of them, except the mining parts of them. Interest rates, absolutely certain. What about the energy sector? Duh. So that's why I cover it. But then we're covering all the others that give you other parts, and I'm constantly rotating in here. Currencies most certainly are watching just what we're talking about. So the idea is to start your morning off with the news, then get you into the charts quickly. Here's what I think. If you're watching these, you obviously like what I say. Well, how would you like to see me say, buy here, sell there? This is what I want you to do. This is your stop, this is your profit objective, this is why, and I lay it all out on the chart. I do it like that. That's why the webinars have become successful as well now. We've got a big audience that comes into them, regulars, more and more people joining. That's how you go about it. So what's in it? For me, what's in it? Hopefully I'll get down the road some of your brokerage. I'm not going to get rich at $8.95 for 30 days. No chance, okay? But a lot of people will buy these, they'll subscribe, they'll trade through my clients, they'll say, I do need some help, I'd like to work with them, what's Ira thinking? And every one of my brokers are trained in this. So, how do you find out more? Just go to our website under the word research. It's all explained there. I've got a video where I explain it. Pricing's there, you buy it right then and there. I'm Ira. Help yourself. You take care. I'll see you tomorrow.